Good morning, everyone. My name is Jørgen Torstensen. I'm a research analyst with Fearnley Securities and will moderate today's session with MPC Energy Solutions, a very exciting company which is on the verge of being listed on Euronext Growth. The company is represented today by CEO Martin Vogt and Ignace Van Meenen, who is Chief Sales Officer and Board Member of MPC Capital AG. We'll kick things off with a brief presentation of the company, followed by a Q&A session. So without any further ado, over to you, Ignace and Martin.
Thank you, Jørgen, and good morning, ladies and gentlemen. Also, welcome from my side. My name is Ignace Van Meenen. I'm representing the board today, together with Martin, my colleague, who is the CEO of the company. We're excited to present you our company ahead of the listing that starts this coming Friday. And MPC Energy Solutions, in a nutshell, that you see on your screen, is truly a company that provides technology-agnostic energy solutions around wind, solar, battery technologies, as well as energy efficiency programs towards large international corporates around the entire value cycle of sourcing, originating projects, developing them, funding them, running them, constructing them, and operating them. And that is what you see here on this slide. And we start this in the initial growth region, in the launch region, as we say, Latin America and the Caribbean Basin, where we have most of our customers and have a lot of replication optionalities in other regions of the world. And this on the back of a large experience of our teams for more than a decade now, not only in the regions that we want to operate in, but also around all the aspects of the value cycle, as well as all the technologies in which we are investing our and your capital. The investment highlights are very obvious to us, and we have, on the back of what we think is a very exciting coming decade of shifting of energy provisions towards those customers that need it, from high sulfur and high fossil fuel generation towards low or net zero carbon emission driven technologies, on the back of long, mostly dollar denominated PPAs with strong counterparties that we have identified that ensure stable cash flows once these assets are running and operating. MPC Energy Solutions has been able to bank for many years now on exactly that region, on exactly those infrastructure needs, and exactly also those investment needs that we have seen on the back of a lean and transparent corporate structure with a number of attractive investments that we have circled and centered around 13 ready-to-build projects with PPAs in place for a total equity investment that we can invest over the next 12 months of 106 months over the next $160 million. That translates in a very attractive shareholder return of more than 10%, 11% on the back of that portfolio, and with a running track and a track record, as well as a pipeline that gives us more room to grow. With that translates in MPC Energy Solutions. Today, we already own 7 projects with a renewable energy capacity of 333 megawatts and a PPA coverage that we target for this year. That portfolio that Martin will explain in detail in a minute is mainly centered around solar, while the use of the proceeds that we have secured now is going and be mostly allocated to 13 ready-to-build projects, which is a portfolio not only on solar, but also hybrid and energy efficiency. Those investments are mostly secured already with PPA coverage for a duration of around about 18 years. And with that, I'll hand over to Martin. Martin, also from your side, please.
Yeah, good morning and welcome from my side. It's a pleasure to presenting the company today to you ahead of our listing at the end of this week. So if we could dive to the next slide. Here we want to show you the attractiveness of the launch region. On the left-hand side, you see the very ambitious political commitments towards renewable energy. in this region really to unlock economic growth, given that the thermal power and traditional conventional power facilities are producing energy at very expensive prices. So renewable energy is also a way of attract foreign investment to reduce the energy cost levels of the local industries as well as residential users. So the next slide, we basically show our two business lines and our clients. On the one hand, you have the utility scale solar and wind business, where our clients are very much the utilities, privately and state-owned utilities. And our second business line is towards the international corporates as clients. Here we have international corporates that operate and manufacture and produce in these countries, and they are seeking for cost competitive, reliable and low carbon energy supply to be procured through MPC Energy Solutions, either as a hybrid or as an energy efficiency program, in order to really meet the 24/7 demand of these customers. If we go to the slide where we have now our ready to build projects, these are projects that we are intending to acquire with the proceeds of this private, with the equity offering. And therefore you see here two clusters. One is in El Salvador. In El Salvador, we have already built last year our first project that is very much a solar-driven market. And you see Puerto Rico. Puerto Rico has a very strong international corporate base that is usually producing for the US market. And there we see a very strong industrial demand for energy efficiency projects. Generally, we want to create a diversified portfolio with various off-takers in various jurisdictions with various technologies in order to create a diversified portfolio. Here we just want to show you in a nutshell a little bit how this diversification is being built up, how we are intending to deploy our capital throughout the next year and in the different projects in these markets. But I think it is more interesting to show you already here the inherent growth that we have within the company. Colombia is one of the most attractive renewable energy markets in Latin America. It is a market with very strong growth ambitions, given that basically as of today there is a zero installed capacity. So given that it is the third largest Latin American economy with more than 55 million citizens and a very strong international corporate base, we see here several thousand of megawatts of solar and wind capacity being built in the coming decade, and MPC Energy Solutions wants to be one of the leading contributor with our own portfolio in this growth segment. As I mentioned before, El Salvador is one of the markets that we want to penetrate further as well. El Salvador has the ability, given that the country adopted the US dollar a long time ago, to exclude any kind of currency exposure. And we have AES as one of the controlling players in the market and as a very strong off-taker for our energy. Jamaica is one of the role models in the region. They have shifted already their energy metrics from being primarily fueled with diesel and HFO powered generation facilities towards LNG and renewables. They have successfully introduced and implemented already the first wave of projects. MPC is one of the owner of the largest solar park on the island. So we do have demonstrated in the past already our capabilities of developing, financing and building and operating solar parks also in El Salvador and Jamaica. So these projects are being developed in the course of the next 18 months, and we will then bring them to financial close and build. Over to you, Ignace.
Thank you, Martin. So in a nutshell, a couple of words on how we are really designing the way we operate on the ground in the regions where we focus on. And as Martin said, and as also, by the way, the name MPC Energy Solutions says, we truly believe that meeting client needs stands first and foremost. We're shying away from large tenders. We are going directly in bilateral discussions, negotiations with customers. This is something that is more, and that's also why it's technology agnostic. It is centered around what specific large customers in those regions need, and not what is politically with high prices or artificial prices, high prices required in those regions. This is also one of the things that shields us away from taking high risks. It also allows us to have better prices, to tailor-make solutions, and that is also the experience that our teams have had in the last years that they are active in those regions. Also, one of the points in number 4 here, local partners, cannot stress it enough. Being embedded in a local ecosystem in those non-OECD, mostly non-OECD environments is very important. It's key. It gives us early indications which projects are attractive, gives us also early origination optionalities. We retain mostly local partners also as long as possible in projects rather than buy them out. That allows us also that buy-in and having also these early warning systems. That goes hand in hand with a balanced out risk-return profile. It's also what you will not see is that we have large cluster risks in the building up of our portfolios. We focus on those small to medium-sized projects. It also allows for a more rapid scaling up of activities. So usually the size and the bite size that you have seen in our 13 ready-to-build projects, but also in our long list of projects that we have, that is a capacity buildup of between as small as 5 megawatt all the way to 75 megawatt per investment. And that in total creates a very diversified portfolio. That is also our intention to do, with no cluster risk to single projects. So also one of the things that the board of directors and the CEO, Martin, and his team are focusing on is to make sure that we are not allocating more than 10% of the equity in a single asset. On the left side, you see further growth optionalities that we have. We have highlighted here also that we have already identified additional growth in Asia Pacific with almost $250 million. That, if all goes according to what we have mapped out, we can secure for ourselves in further growth. And further $220 million of equity investment in Latin America and the Caribbean basin. Translating in numbers, the return projections we think are very attractive on a project SPV level, i.e. on an asset or investment on a asset by asset basis. That is around about mid-teen, around 15% rate of return on an overall corporate level that translates into 11% shareholder direct IRR at 100% cash payout. Or translated into profit and loss vocabulary or an EBITDA margin, we're looking here at a company in a steady state post implementation of the investments of around about 70 to 75% EBITDA margin on the total volume of sales once these assets are operative and producing cash flows. On the the lowest section of this slide, you see the indicative yield projections that we have mapped out on the back of the first basket of investments. Once they are in a steady state, which you see here that we have planned or targeted for the full year 2023, investing and starting to build up in this year and next year, that means that we are reaching a dividend payout of 4.2% based on 100% dividend policy payout. How much will be paid out from a dividend perspective is something that the board of directors will decide. Some in criteria that play a role, of course, is here. What is the best way of creating value? Is it better to retain the earnings and further grow on the back of the retention of earnings, including further capital increases, but that also will depend on the development of the stock price. A couple of words on corporate governance. The company, from a strategic point of view, has a dedicated goal to grow, not to stand still at a $100 million market cap, but further grow, meaning on the back of that, we have set all the governance principles as shareholder friendly and as open as possible, because we truly believe that that is the basis to stand on in order to have a smooth and steady growth of the company within a capital market environment. That means there are no, all shares have equal rights. There are no staggered boards. There are no anti-takeover or blank check provisions. We are, of course, in full compliance with the recognized standards for listed companies. That automatically means that we are seeing ourselves as being best in class and aim to be best in class in terms of reporting and disclosure requirements. I remind, we start as a listing upon the Merkur market, so the entry point. Once the company grows, and it is also the ambition of the company to grow into the motherboard and the main board, that will increase over time also the disclosure requirements. In terms of a sponsor commitment, MPC Capital has, from the total of $100 million, $20 million of commitment into the overall. That is a strong commitment. That also means that we have from a sponsor a strong backing of the MPC Energy solutions within the listed environments. We stay in and nurture that as long as possible. If there are projects sourced from the sponsor, there is a right of first refusal on projects here, and there is an independent and opportunistic investment approach. That you see also on the board of directors, with 3 independents representing the shareholders' interests, with Ellen Haneto being well known within the Scandinavian markets as chairman of the board of Circus, Kjell Roland as being more than 12 years CEO of Norfund and still managing director there with its vast expertise in clean energy investment, as well as Catherine Baker with her background from McKinsey and her investment banking times. Martin, over to you. A couple of words on the top team.
Yeah, it is obviously most important to execute upon this strategy with an experienced team. You see here our senior team that is leading the operations of the company, primarily based in our launch region, which is very important for us and showed already in 2020 was a very competitive advantage to have our team in the region with all the travel restrictions caused by COVID-19. Our team is based in 2 offices in Panama and Bogota, and we have a team there that has many years of experience in the renewable energy sector. Previously also worked at other leading renewable energy firms. And this is the nucleus of the team that will support the further growth of the company starting day one.
A couple of words on MPC Capital AG. For those who are not familiar with MPC Capital AG, MPC Capital itself as a sponsor is listed in Germany since more than now 20 years, 25 years in existence. And we are a business enabler, a business nurturer, not only in the energy sector, but also on the real estate side, as well as on the international logistic infrastructure and shipping side. For our business in energy solutions, and here with energy solutions, we have focused setting up, as we always do, putting our teams and our resources to work where our businesses are. And that is, as said, in Bogota, Colombia, as the regional head office for origination and development of business, as well as in Panama, because those 2 hubs are the easiest travel hubs, and as well as operational hubs and LinkedIn hubs in the region. And as we grow, we will obviously do the same once we reach out and on the back of our investments in Southeast Asia. And with that, we close our presentation, hand it over to Jørgen for an open up for questions. Thank you for your attention.
Thank you for that, Martin and Ignace. Let's start with a high-level question. I couldn't agree more with your introduction, Ignace, with the fact that we have a very exciting decade, not to say a couple of decades ahead of us. And on that note, what's your long-term vision of this company? Where do you see it in, say, 5 years?
Well, thank you, Jørgen. I'll hand that question to the CEO. He has to drive the business and give his perspective on that. But it goes without saying that that there is a huge potential to grow in all the regions that we are active in. And it is something that we will have to be very careful in a structured approach how to do that. Martin?
Yeah, I couldn't agree more to what you've said. I mean, we're just at the starting point with the birth of this company and its listing at the Euronext growth segment. We clearly, in 5 years, will be a global player. We have very strong ambitions to very quickly grow out of the launch region and replicate successfully our business model in the Asia Pacific. Asia Pacific is a great growth market for renewables. We saw the development in various countries over there in the last 2 to 3 years. But we also see that the current launch region will provide us with sufficient growth opportunities for the next decades. And this will make us hopefully to one of the leading contributors to the energy transition in the emerging market space in these 2 regions.
Yeah, and it's not without a reason that we've chosen the name Energy Solutions, because we truly believe that in the next decades the focus will be more coming from clients and less from specific technologies, which is sometimes we have a mix in our business when we discuss business with our clients from the large multinational corporations, for example, where there are production facilities in those regions that need to be on the grid 24/7 and also more independent from less reliable power grids, and at the same time fulfill the net zero carbon emissions pressure and also commitments that they have done themselves. So that is why we said, look, we cover all technologies. We listen to our clients. We tailor make those investments according to those needs. And we grow alongside with our clients, irrespective of what region we are. Also simply because most of the aspects of the investment value chain that we cover are global and standardized. And that allows us for scalable growth. Back to you, Jørgen.
Good, thanks for that. We have a couple of questions from online. The first one is the company making any money today?
Martin?
The company is not making any revenues today. As we described in our use of proceeds, we have a development portfolio that we will further nurture with the funds that we are collecting with this private placement, and the subsequent proceeds will be used to acquire projects that are ready to build. In the infrastructure space, which renewable energy is a subsector of, you have to consider that there is a certain construction period before these assets are creating revenues through the sale of energy. So we are also targeting a couple of operational assets that do have already a positive cash flow, but we expect the first projects being operational and selling energy and receiving income by the end of this year.
Good, thanks. And there's also a question on the deal. Is it possible to provide some color on who took part in the equity issue? And if you can't comment specifically, can you give some sort of an indication of what type of investors the deal attracted?
Yeah, I'll take that question, Jørgen. First of all, we have in the build-up of our investors' portfolio for the initial public offering, we have mainly targeted institutional investors. alongside of MPC Capital's commitment of $20 million. And that was targeted threefold. There is a large Scandinavian institutional investors community. I'll just pick out a few that have contributed and have subscribed to this equity offering, which is DNB, KLP, so typical pension funds and investment funds of the region. Furthermore, a second block of investors were coming from domestic Europe, and that goes from Germany all the way to Anglo-Saxon world, Luxembourg, northern part of Italy, that have a specific mandate to invest in energy assets or in energy corporations or in companies that are focused on net zero carbon emission or impact investments. And the last block, or the third block of investors or target investors were coming from overseas, from the Anglo-Saxon/US domestic world, that also they are familiar with those investments in energy solutions, but also understand their, we'll call it backyard of the launch region. It's a dollarized region, more or less, that most of our multinational corporation customers and target customers produce for the US market. Some of the utilities, private utilities that are customers from us, such as in Colombia, in El Salvador, are US domestic listed large international utilities. So those are the three blocks of investors that we have today. The listing will start on this coming Friday, I believe, meaning from Friday on the Merkur market, there is a trading and a buy and sell optionality for also other investors. The initial minimum ticket for the institutions was $100,000. But I believe once we are listed, that of course is in smaller amounts also possible. And once we grow, and as Martin already also said, our ambition is to grow, and that not only in the operational wise, but also in the capital markets. And once we are on the main board, that will become also more liquid and also more easy with a lower entry barrier.
That's good color. Thanks. We've seen shares in the renewable space appreciate a great deal over the past, let's call it 12, 36 months. Scatec is one clear example of such a case where the equity yields are currently in the low single digits if you look at the current share price. So based on the entry level in this case, which is arguably price book one and IRRs, as you said, in the mid-teens or in round terms, what are your expectations as far as the share price goes?
Well, of course, we hope that we can bank upon the overall valuation environment in the, as you pointed out, Jørgen, in this regard. And if you see on the slide 14, we have set that aside in the key assumptions. There is additional in the last but one plus point here. Here is we highlighted additional upside to initial investors, but also the first investors that coming in once listed through yield compression. The value of the portfolio that we start with in Colombia, the 7 assets there, the 333 megawatt, they're valued at $10 million. If you look at valuations in the market of listed peers, of course, on the back of a higher market capitalization, that you have to take into account as well in this regard. But if you look at that, there is the value of those dollars per megawatt is around about $30,000 from our portfolio. If you look at the sum of the part valuations from other peers, well, it's substantially higher. Is it a different risk profile? We don't think so. Of course, they have a higher market cap, so there's more liquidity in the market in such an environment that they can. It's easier to get in and out because it is probably the spread is lower. But we certainly see that there is an additional upside through this yield compression that is irrespective from the asset investment IRRs and the corporation investment IRRs, but that is more centered towards the overall public market valuation. but time will tell. It's up to us to deploy the capital to deliver on and execute and come into running and operating those assets and also cash flow producing those once the investment phase of this year and early next year is successfully done and replaced by running and operating the assets itself.
That's good color. And since you're on this slide already, could you please add some additional color on the first projects that we're funding in this round?
Sure, Martin, I'll hand that one over to you.
Yeah, and maybe we can go to the slide where we show the initial project. So the first projects that we have listed here, as I mentioned before, we have a cluster of projects in El Salvador and in Puerto Rico on the solar side as well as on the energy efficiency side. In Puerto Rico, the off-takers, they will come primarily from the pharmaceutical and medical equipment sector. So we have strong international corporates out of these sectors that are producing in Puerto Rico. And Puerto Rico, for everyone who's not so familiar with that market, has a state-owned utility that provides a very carbon-intensive power, coal-driven and HFO-driven, as well as suffering under a lot of power outages. So the international corporates, that a lot of them have pledged towards certain carbon emission reduction targets, are obviously looking into alternative solutions to procure low carbon and more reliable energy. So this is where MPC Energy Solutions as a partner to finance and the upfront capex, so the capital expenditures to build these projects, is a partner where we are then amortizing our investment over, let's say, a 10 to 15 years energy savings contract. So we share the savings with the counterparty, so with our industrial client. And on top of that, we are selling them the energy that is being produced now. In El Salvador, we have what we would call more under the distributed generation. These are smaller solar installations that are being built on very critical grid infrastructure points where the local utility desires to have production facilities closer to the consumption centers. This is obviously something that very large-scale projects cannot deliver, usually in order to minimize the impact on the communities as well as the environment. Very large-scale operations are often in very remote areas. But if you consider, let's say, the grid infrastructure in these countries, you have a lot of transmission losses for technical reasons and energy theft reasons. So from a local client perspective, you bring additional value if you are building your projects close to these industrial commercial parks or to towns or to cities. But that obviously limits the size of your projects. The upside for us doing so is we create more value for the local utility. So they have a higher incentive to agree with us on higher power purchase prices compared to what Ignace described already, what is the result of a national tender. To give you one example, there was in El Salvador 2-3 years ago a national tender that resulted in energy prices of roughly $5 per kilowatt hour. We are in the position to agree on energy prices that are somewhere around $8 to $10 a kilowatt hour, only by providing a higher value to the utility and discuss this on a bilateral basis. And this is exactly following our strategy on as often and much as possible to capture more value by really meeting the demand of our clients rather than participating in multi-gigawatt or or tenders that are driven by the political desire to attract renewable energy in the country.
Thanks, Martin. I want to come back to the longer term growth story here, because as we see it, one of the truly differentiating factors in the equity story here is the very high visibility on growth that it comes with. In fact, you can almost identify on a project by project basis where growth will come from over the next couple of years or so, even longer. Could you please talk about the follow-on growth opportunities? What the regions and types of projects are you targeting, and why?
Yeah, happy to dive into that. So within the region, we see primarily growth coming from the markets that have deep energy markets. That is Colombia, El Salvador, Dominican Republic, and Panama. So we see a lot of potential for capital deployment in these markets. Beyond that, we see markets, especially in the Asia Pacific, that have very similar features and characteristics than where we have built our projects in the past and in the near term. This is driven by characteristics like these markets are depending on fossil fuel imports. These markets are still depending materially on HFO and diesel fueled power stations with a lot of aging infrastructure that needs replacement. Replacement in the future will come primarily from renewable energy. And we see also, and that is a very important part of this equity story, the international corporates that are producing. So let's take beverage or consumer good in general, or heavy industries in general as a good example. You have Procter & Gamble producing in Colombia as much as they are producing in the Philippines. So the scalability of our business model is what Ignace described already, to go along with our clients. And when they go into energy procurement processes, and very often you only see in the media the very big tech giants like Amazon, like Google, like Facebook, who are procuring energy for their data centers. But the corporate and international market for these companies is much broader than what you see at the moment, primarily in the media headlines. It's energy intensive businesses like cement. It is consumer business where the strong desire from the consumer comes, putting pressure on firms like IKEA, like Procter & Gamble, like Nestle to produce on a very low carbon footprint. And very often in the energy markets in, let's say, the more emerging world, you can't just switch your tariff like maybe in Scandinavia or in Europe from, let's say, a nuclear fueled energy tariff of your local utility to a green tariff. So at the end, that puts these corporates in the demand of procuring their energy directly from the producers. And this is where MPC Energy Solutions will go along with these clients in our established network of corporates to produce power for, and whether they produce and want this in the Philippines, or they want this in Thailand, or they want this in Colombia or in Panama, this is where we are their preferred partner of choice.
Makes sense. And given your geographical exposure with initial targeted markets obviously being in the Caribbean and Latin American regions, one question that I think is relevant as such is how you deal with the operational and financial risks.
Yeah, we are obviously also primarily risk managers when looking at our operations. I think a very important point is by now that the technologies in itself are very mature. The supply chain and the construction activities are also global businesses. You can pretty much build a solar park with the same set of contractors and equipment providers in El Salvador, then you can do it in Spain, then you can do it in the Philippines. So this is where renewable energy as an industry has matured materially in the last decade. That gives us obviously a lot of comfort because we can work with trusted and established large companies that are doing this business in various regions. But that also means a very high standardization of the contract. So if you look, for instance, at your operations and maintenance contracts, or if you look at your construction contracts or insurance contracts, these are by now standardized very much throughout the regions, obviously always reflecting the unique local nuances, but 80 to 90% of contracts are standardized simply because also of the financing structure. I'm now going into the financing risks. So usually these kind of infrastructure assets are financed on a asset level, and the lenders, so the commercial banks that are providing the loans to these assets, they are making sure that in each of these assets you are meeting these kind of global standards, and that put obviously a lot of pressure in the last decade to agree to certain standardized terms with regards to all of these features. And now companies like MPC Energy Solutions are benefiting from that high degree of standardization when it comes to operational and financial risks. Usually on the financial side, we are amortizing our loans and repaying our loans within the period of the initial power purchase agreement. That is the basis for our long-term cash flow generation, the energy sales that we are securing on this basis. But also usually we are seeking a very high degree of fixing our interest rates so that our cash flow is fairly predictable on a 10 to 20 years basis when it comes to the asset operations.
Okay, thanks for that, Martin. You briefly mentioned it during the presentation, but I'd just like to touch upon your track record as well. Could you please highlight your experiences with developing projects in this region and elsewhere for that matter, and specifically how what the most important lessons learned are and how you will benefit from those lessons in MPC Energy Solutions?
Yeah, MPC Capital as the sponsor of this company has started to invest in renewable energy already back in 2006, 2007, so roughly 15 years ago, when the first big wave of commercialized projects in Spain started in the solar sector. Since then, the sponsor, and we have a slide on this, has built various renewable energy projects on 3 continents, pretty much all the way from Mongolia in Asia to Costa Rica in Central America. Small as well as large scale projects, different technologies, so from biomass to wind to solar to energy efficiency. So I think we can say that MPC as a sponsor has a wealth of experience within the sector. The other part is what is the team. The team, as I described before, we do have a very strong local senior team that each of them has more than a decade of experience in the sector, within the region. And I myself, I'm all my professional career in renewables. I started more than a decade ago with renewable energy projects in Europe, primarily onshore and offshore wind. And since joining MPC Capital, the sponsor, in 2014, I have worked primarily in the emerging market space and also leading the expansion of the firm's business into Latin America in 2016. So I think the combination of what the sponsor had initially as a track record and the team that is now managing the firm, we do have a very broad industrial focus on the sector.
Good. We're closing in on the end, but just one final question, if you don't mind. And in your opinion, how should investors think about the investment opportunity that MPC Energy Solution presents to them?
Ignace, over to you.
Yeah, well, actually very simple. It is MPC Energy Solutions is one of the early birds, so to speak, in this next generation and next wave of publicly available opportunities to invest through the stock market. If you look at the entire universe of investments that are possible, and given the fact that we are the next 30 years, we need to do substantial efforts to get to a net zero carbon emissions overall industrial environment on this planet. And given the fact that there are not that many companies that have reached true scale compared to other industries, and with true scale I mean a market capitalization that is well above a double-digit $1 billion that we have. The largest one is today is $3-4 billion, which is compared to other industries like a small bird. So in order to get there, and if you are really interested in these impact technologies, in these impact investments, and in a transition of energy on the back of capturing also value in terms of profitability, once these portfolios are getting out of their heavy capital intensive startup phase into producing the cash flows alongside of long dollar denominated PPAs in those regions, well, I think this is an attractive opportunity to get into it and come along and watch and observe how then the teams and the executive management delivers on its experience and delivers also on the pipeline.
Very good. So that's it. And that pretty much concludes this session. So thanks again to Martin and Ignace for some really interesting color, and we look forward to following the equity story once it's listed from this Friday.
Thank you, Jørgen, and thank you to everyone for listening. Bye-bye.
Thank you very much.